Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. As everybody that reads my reports and watches my shows knows, I'm very bullish on gold. The primary reason for that is I think that there's a death spiral of debt that is forcing the world back into a gold standard. And so this creates tremendous demand for gold. But on the other hand, the supply chain is really broken from the majors all the way down to exploration. There's not enough exploration success happening, which means that there's not enough projects in development. And you can see that problem with the majors that are struggling to increase their production and replace what they produce. And so I think the real key to that is that we need more exploration success. The problem is I'm always on the hunt for good stories in exploration, and the menu is quite small, which is why I'm happy to bring to the show today Canadian Gold Corp, which has a very high-grade project that has continuity to it. We often hear in the mining space that grade is king, but really what is king is the combination of grade and continuity. If you have patchy distribution of high-grade gold, you're not going to have a successful mine. And in the case of Canadian Gold Corp's Tartan project, it has that combination of high grade in an orogenic gold system and continuity. So I'm really happy to bring on Michael Swiston, who is the CEO of Canadian Gold Corp. Thank you very much for joining us today, Michael.
Oh, it's a pleasure to be here, Alan.
So why don't we start off with a little chat about gold? What do you think about my overview of the argument to be bullish on gold?
Well, it's an interesting thing as we speak. There's missiles raining in both directions in the Middle East. There's a lot of instability. I think you're right about that, and there does seem to be no desire for any type of fiscal restraint in a lot of the major governments. So, as long as people are talking about modern monetary theory as a serious idea, I think gold as a hedge against inflation is pretty safe, and it's being reflected in the markets. Also, in terms of a vehicle to hedge against volatility, that's one area where the crypto stuff was often thought of as being an alternative asset category. But what's we found is that the markets found in times of crisis, the correlation to the markets. You're always looking for assets to hedge against volatility. In any type of a market test, it always seems to be that the crypto moves absolutely in tandem with the tech stocks, and you don't get that hedge against volatility. So time and time again, you're seeing that gold is performing where other asset classes aren't.
And it's been on a tremendous run this year, making a series of higher highs and higher lows. And each high becomes a new record high. That's indicative of a very powerful bull market. And ultimately, I think that that's leading us to, well, partially the debt crisis throughout the world that I've referred to as a death spiral of debt is a main driver. I think we're coming into a new world, new economic world, Michael, that gold plays an important role, as you said, in for volatility, but also as the gold standard, giving some forced restraint to the politicians who issue debt and fiat currency like it's going out of style.
Yeah, and to that point, you're seeing a number of countries coalesce around the BRIC standard. You see central bank buying versus reversing the prior trend of them disposing of their gold assets. So you see significant buying by central banks, and you're also seeing the rise of consumer buying in India, in China, across the world, really. So yeah, I think everything's very positive for the outlook to gold. I think it sees 3,000 before it sees 2,500 again.
Well, I like the sounds of that because I'm predicting 3,000 this year,
Mm-hmm.
or at the latest early in 2025. And one of the encouraging signs I've seen recently is that the flows of funds into the gold ETFs in the West have changed from outflows to inflows. So I think that, in combination with the consumers in China and India, we're starting to see consumers in the West participate. So a lot of green lights for gold.
Well, and now you're beginning to see that the gold producers stocks are beginning to perform. There's been a disconnect between the rise in the value of gold and the valuation of producers, and certainly a historic disconnect between the exploration side and the price of gold. And there's only one of two ways to resolve that gap in the marketplace. One is the price of gold can come back down dramatically, which I don't think is in the cards, or the market will take a fresh look at the valuation across the spectrum of producers, developers, explorers, and revalue the entire sector. And I think that's the more likely route that we're going to see this valuation gap resolve itself.
And that performance of the majors, you look at things like Agnico Eagle and Alamos, who are my top picks. They've been really excellent performers, and a lot of that, what's separating them from their peers is record free cash flow, increasing production, decreasing costs. This puts them into a wonderful position. But in the majors, in the developers, and in the explorers, I believe there's a very small menu for the generalist investors to get if they want the highest of quality or best in breed in those various different categories. And, uh, Canadian Gold Corp is what I think is an undiscovered gem that I'm sure you don't want to hear that it's not well known, but well, we'll try to do something about that, Michael.
Yeah, I appreciate that. Yeah, that is one of my mandates and just by way of background, if I can diverge a little bit, and how I ended up as president and CEO of Canadian Gold Corp. Prior to this position, I'd spent my career largely in M&A in capital markets and various entrepreneurial ventures. And I was asked by the former premier of Manitoba to come in and be the secretary of the Economic Development Board for her administration, for Premier Stephenson. So I joined that team, and one of my mandates was to improve the mining competitiveness of Manitoba. It was 37th, I think, when she took office on the Fraser Institute study. So, we had work to do. And I had a unique perspective in that role, was that I was able to look at all of the companies that were active within the jurisdiction of Manitoba and could look at where they were at in their development, what the prospects were. And again, bringing my capital markets lens to things, I had a pretty good perspective, a bird's eye view of what projects looked like they had the best return dynamics in terms of lowest capex for fastest time to production amongst the exploration side. And in that process, I got to know Canadian Gold Corp. And so when the government changed and I left government, I was approached by Alex McEwen, who's on the board of directors, and asked to take the position. And yeah, it's the way I describe it to my sons is that it's the ripest apple on the tree. And it's very exciting to have been asked to get into the company, into the role of president and CEO, and raise awareness. That's again a big part of the mandate here, is just to tell the story. And I have to say, Manitoba has been a sleepy jurisdiction. We were 37th. fast forward 2 years from when that happened, Manitoba is now sixth on the Fraser Institute for Competitiveness, and the new government has committed to trying to match that and improve that further. So it's a pretty exciting time in Manitoba, but again, it's a small province. It's been sleepy for a while, so the jurisdiction doesn't get its due.
Well, Tartan definitely has that potential. It was a past producer, and ran into some problems. One of those was the decrease in the price of gold, and I think they had some debt issues as well. But what got me attracted to the project was a combination of up in the top of the system, you could see a very distinct trend to that high grade gold core that pointed deeper. And then the drilling that it stopped at about, I think, the 700-meter level.
Actually, the drilling was down. The historic, just a point of clarity, it was about 500 meters, 525 meters.
And then Canadian Gold Corp came in and drilled below that and had exceptional results that suggest that that trend continues to depth. And in these orogenic gold systems, the depth potential is very important, because that's what Goldcorp was all about. What made it such a phenomenal mine was when they got drilling deeper than 1,000 meters, when they hit the bonanza grade portion of the system. It was phenomenal. It went quite a bit deeper.
Yeah, and that's what we're seeing here. The current 43-101 resource estimate that was done in 2017 was not, my correction here, 575 meters of vertical depth from surface. Since then, since Satori and then now Goldcorp has taken over this project and started drilling again, we've extended that down to the 1,000-meter level. So we've increased the depth about almost doubled the depth of the resource. And you're absolutely correct. What we're finding as we're going deeper is wider intersects at improving grades. And we're at a stage now where really the next step for us, once we complete the drilling process, the phase 3 drilling program that's going on now, is to really update that resource estimate and move immediately, almost simultaneously, to a preliminary economic assessment. And you're right, this isn't a new mine. This is the restart of an existing mine. I jokingly say our bulk sample was the 47,000 ounces that were extracted in the late 80s. We know the gold is there. The reason why the mine stopped was just terrible economics at the time and debt issues. But this is a project where you can restart it with a very modest amount of capital because of the infrastructure that's already in place, the road, the power. It's right beside Flin Flon, 25 kilometers away. It's a town that has a century of mining history around it. There's a great workforce there. There's no need for a camp. And you have a mine that needs to be dewatered, and we step into the shoes of all of the underground works that are there, down to below 300 meters of ramps with 6 mining galleries. And literally, when we dewater this, the first rock that comes out of that mine is going to be ore. And it's not often you get opportunities like that.
Well, and the price of gold back compared to when it stopped production is multiples higher. And so with that combination of grade and continuity and the price of gold today, makes for a very exciting dynamic.
Yeah, it is. There's a reason why you're seeing people that know gold, like Rob McEwen and that, where they saw this and they go, this is very much the same as Red Lake. It's the same as a lot of these historic mines in the Canadian Shield, where you're seeing they have very deep roots. And once you get into it, it unfolds to be a very large story. Just within a 25 kilometer radius of the Tartan mine, there's been 8.8 million ounces of gold taken out of the historic mines in the region, mostly by Hudbay from their VMS work. But again, there is a lot of gold in this region.
And speaking of Goldcorp and Red Lake, again, for the first 1,000 meters or so, it was a struggling mine. But it was an orogenic gold system that, as you said, they have deep roots. And now for the non-geologists out there, what that means is these orogenic gold systems, they need cracks in the earth for the gold-bearing fluids to make their way up. You need very old rocks. That's another characteristic of orogenic gold systems. And why you see a change as you get deeper into these systems is as you get closer to the heat engine source of that gold, which can be kilometers below the surface, you generally will see an increase in the grade as you go at depth. And that's exactly what happened at the Red Lake mine for Goldcorp, was the top part of the system was fairly low grade. And it was why they were a struggling mine. They got down to 1,000 meters and they hit the bonanza zone of that system, and it kept on going for another 1,000 meters. And while that was happening, Goldcorp was one of the lowest cost producers in the business, and they were producing such high grade that they were really a free cash flow machine. I love the sounds of free cash flow machine potential, but realistically, finding those is not easy. And Tartan definitely falls into that category, which I think is why you guys are trying to understand the depth potential as well.
Yeah, and in the phase two program, we went quite deep. We went down to just around 1,000 meters, and we had an intercept of 53 meters of width of 4.2 grams per ton. And so we're seeing that, like, again, we're seeing an expanding width of the resource at still at very, very good grades. And it's like, okay, it's the appropriate time now with the data that we've gathered since 2017 to do a resource update and to look at the economics of getting this into production sooner rather than later. So I do think that we're going to have a lot of news this fall in the run up to this fall and winter into the run up to PDAC. I do think that we're going to be looking at the market revaluing this from an exploration company to more of a development play as we get this data in. Again, I just look at it and I can't state this enough. It's the ripest apple on the tree.
Well, when it comes to orogenic gold systems, what happens often is that they have a nugget effect. Okay, so you get your gold in very rich pockets or nuggets, if you will. And there's a couple of issues in that. One is that, well, the main issue is how do you get representative grade of what you have in your rock? For example, if you cut the core and one side goes to the lab, you could be inches away from fabulous grade right beside what you sent to the core or to the lab. So a couple of ways to combat that issue is that now there's a company called Chrysos that is using photon assaying. So it's like using an X-ray sorter to sort out the gold. And diamonds are very nuggety as well. You get very small things that carry all the value in the rock, and they use X-ray sorting to get all the diamonds out of the rock. Are you guys considering using Chrysos and their photon assaying. Why I like this so much is that they crush the entire core and then they use the sorting to get all the gold out of it, which is going to give you a much more representative grade than traditional assaying. And because when you crush the core and you send it off for either metallic screening or fire assaying, it only samples a small portion of that core. And so, have you guys considered photon
Have
assaying?
We haven't made the switch yet, but we are. There's a lot of discussion amongst in the geological team and the business team here about the merits of that versus the conventional assay. Yeah, you're seeing more and more, especially as you talked about how the nuggety, I guess, for lack of a better word, these deposits are where there's a lot of merit to the photon assay. We haven't made the jump yet, but I can say that there's a lot of discussion of that internally. Because there is a concern that, depending on how you split the core, what side of the split, you don't know what you're actually sending away. Because again, we're even today we're seeing visible gold in some of our samples. So but an inch over, it's just quartz.
Yeah.
So yeah, it's one of those concerns that you have.
Well, I highly recommend it because, like I said, you crush all of the core and it recovers all of the gold out of all of the core and gives you a much more representative grade. And that is a big concern because you could be literally a half an inch from a spectacular grade and a modest grade, and that's why I follow the grade distribution very closely, and I also follow the distribution of visible gold very closely in an orogenic gold system. The reason why is when you're high in the system, what you're generally going to see is uh, um, uh, sporadic fine grained gold. As you get deeper in the system, it becomes abundant, fine grained gold. Then you see a transition into coarse grained gold, abundant coarse grained gold. And then when you get into the bonanza zone, it's amazing. I remember going to the PDAC conference years ago, and Goldcorp would have displays of gold specimens. And sometimes in that bonanza zone, it was like half quartz, half gold. And so this is why these topics are important to me in an orogenic gold system, Michael.
Yeah, well, you're absolutely on point. That's exactly what we think we're on to here. So it's it's very exciting. Like I said, and we have a lot of, like I said, between now and March, we have a lot of we're going to have a lot of news. We're going to have a lot of catalysts for the market to look at this and have it revalued. Like we have about 184 million shares outstanding right now. Our market caps, depending on the day and the share price, high 20s, low 30s for market cap. You look at it, even based on the old the 2017 43101, it's about $800 million worth of gold in the ground there. And now we're going to update that. I think the market will take a fresh look at this, and then once they begin to understand how few steps are involved to getting this back in production, I think they'll look at it with a fresh set of eyes.
Now, have they talked about the potential to another way you could combat this coarse gold is that you can take bulk samples. Because then you process all the all the rock. Has your team, when they get that dewatered, is there a plan to start taking some bulk samples from the bottom of the workings? Have they been talking at all about that, Michael?
Well, we've been doing a lot of discussions about the various ways to attack this. And again, because our largest shareholder is Rob McEwen, I have a unique ability to draw on a lot of talent and a lot of expertise from his teams, and we're having active discussions about, okay, when we actually look at dewatering this, to your point, what's the best way to go back in production? And there's a lot of optionality with the Tartan deposit, because there is good infrastructure around the area. There's a lot of mill capacity around the area. So there's optionality for us to explore potentially toll milling, things that we can do when we get in that would reduce the capex, but get us back in production, to allow us to do things like a bulk sample, or to look at a bulk sample just leading right into production on a potentially a toll milling facility, or a toll milling arrangement, or potentially looking at even on site. At the surface works, there is an old mill, but it was an older process. We're going to, our thoughts are heading towards, crushing the ore to a very fine mesh size, and then looking at flotation for the balance, and potentially bringing in better techniques so we can get to that, mid to high 90% recovery on this. That was one of the challenges with the old technology. The recoveries weren't great with the first iteration of this mine, but it's been 40 years. The processing recoveries are a lot better.
And the guys at McEwen Mining there with Rob, they know a little bit about that sort of stuff.
Yeah, like I said, I'm very blessed that we have a very good depth inside and outside the company. So,
and so we've brought up his name a few times, and actually his son works with you,
yes.
Alex McEwen, and Rob McEwen owns about 35% of the stock in Canadian Gold Corp. And I imagine his initial investment probably had to do with similarities between it and Canadian. Well, I think that's why it's called Canadian Gold Corp.
Right.
And the original iteration of Goldcorp is probably why he's such a massive shareholder and behind your efforts.
Yeah, I think he recognizes the similarities. The geology is very striking in how similar it is, and even the history of, you have a relatively shallow mine. There's historic results, and it's time for a fresh set of looks. The economics have changed entirely on this thing, and when you look at between not just Mr. McEwen, but you look at the insiders, an additional 9%, or 44% of the stock is essentially insiders and the McEwen block. So it's and that, I would say, patient money beyond that would take us north of 50% of our stock. So it's not like we're pardon me. It's not like we're subject to a lot of volatility, but I do think that, like I said, as we tell the story, and that's my mandate, tell the story better, advance this towards development. I think that the market will really take a fresh look and revalue this. Again, the worst thing you can say about a business is it's the best kept secret. So there's the thing. It makes me cringe every time I hear that.
Well,
but to the advantage of shareholders today, it's a good point to jump on the train.
Right. And part of the way to getting that story out there in a more significant way is with the Truth Machine, the drilling. And you guys you've been doing some significant drilling. Why don't you give us a rundown of what you've done as far as drilling and what's pending?
Well, we've done about 16,000 meters of drilling since 2017. We've extended the historic drilling was down to about 575 meters depth. We've been drilling continuing to go down strike in vertical depth down to 1,000 meters, and that really has been one of the focuses while we were doing that, while we were going down, we drilled through the main, what we call the main zone, and we hit a parallel zone that was separated by only a few meters of horizontal depth into what we call a hanging wall zone that was incredibly high grades. I just want to, I don't want to misquote my grades, so just bear with me for a second. I just want to make sure that I pull up the grades on the
You
hanging
go
wall
ahead and
zone.
do that, and I'll tell people a little bit about continuity and what happens in these orogenic gold systems.
Yeah.
You know, in any system, you have to be aware of continuity of the grade. And at Tartan, that was one of the initial things that got me excited about the project, is that I could see a core portion of the mineralization that was mined had a very competent and great continuity to it. But as you get deeper, you want to see that continuity continue, which they have done. And I think you got your grade there you were looking for, Michael.
Yeah, I do. Well, again, just for context, the 2017 resource estimate was an average grade of about just over six grams per ton. So what we're finding is, we're finding intervals of, like I said, a deep interval 4.2 grams per ton over 53 meters, including 8 meters at 12 grams per ton. That's at almost 1,000 meters. The hanging wall zone that we hit, that was again a parallel zone to the main zone, at about between 650 and about 700 meters deep. We're hitting grades that are 23 grams over 12 meters, 47 grams over 5.8 meters. So we're hitting these, and so like I said, we've done about 16,000 meters of drilling. We're doing an additional 2,000 meters this year. That's ongoing right now. The focus is trying to delineate the outer edges of the hanging wall zone, continuing to kind of probe to see if it continues to see that. Our focus is trying to add ounces of resource relative to the costs that we're doing. Like, if we can add ounces at 21 in terms of drilling costs, like, $21 to $35 an ounce to discover more, that's what we want to do. So our initial focus is the hanging wall zone. Then we're going to flip around to drilling more at depth and at that 1,000-meter level, and again trying to step out to the west of the main zone where we've had that great intersect of over 50 meters, and we want to just confirm that we're seeing that continue to the west, because we believe it's going that way. The last phase of our drilling this fall will be turning around, repositioning the drill, and there's a zone that we call the south zone that is a parallel zone to the main zone. And it's funny, the ramp and the underground infrastructure was constructed correctly right between the two deposits. So, in the main zone, most of the historic mining was there. There's 6 mining galleries at various levels down to 300 meters. In the south zone, there's a drift over there, and so there's access to that. But we're also finding really good grades in the south zone, and so we want to. We did a couple of holes down at the 400-meter levels of the south zone, and we're getting like 7.8 grams per ton, 6 grams per ton. And what we want to do is and that was at 450 meters, but there's a gap between 200 meters and 400 meters. So we want to go and kind of fill that gap in between the historic drilling and our holes, just to see if there's continuity. We believe there is continuity down there. And then to the east block, we had a hole that we did that was 2.8 grams over 7.9. Not that exciting, but it's where a lot of the historic drilling is. That was at about the 300-meter line. We want to go below that and see if the eastern block of the south zone has continuity going down. And that's kind of the end of the program for this year. With all that data in place, it's time for us to move to a fresh 43-101.
Well, what you're describing there, when you can find ounces for cheap, What that
Yeah.
often means is that you will have a very low cutoff for your resource because when you estimate your costs, if it's cheap to find ounces, it's often cheap to mine those ounces as well. And so what I look for in a resource is the gap between the cutoff grade and the average grade. I also not pay a lot of attention to what goes into calculating the cutoff grade. Why that's so important to me is that a lot of juniors, they do what I call arm waving resource calculations. And what goes into their cutoff grade is arm waving as well. And I was encouraged to hear that quickly after you do a updated resource, you also want to do a preliminary economic assessment. For my investors out there, what that means is that they will do a lot of the realistic calculations of the cutoff grade in the resource, and they will constrain the resource to what can make its way through the preliminary economic assessment. Now, I know a lot of people, they love these arm wavy resources, but those kind of resources also have a way of collecting a lot of dust over a matter of years before they ever get to a preliminary economic assessment because they don't hold up to having the economics wrapped around them. So I'm encouraged what I'm hearing regarding the resource, the low cost of finding ounces, and what that will mean in a preliminary economic assessment.
Yeah, and to that point, and one of the things metaphors I use with my sons. My sons are now they've been investing for years, but they're now in their late teens, early 20s, and you got to I was explaining to them the economics of what this looks like, and I said, the best metaphor is, we're starting a 100-yard race at the 75-yard line because we have so much capital investment that we're stepping into the shoes of. It's like buying a fully constructed condo in 2008 in Miami, and all you have to do is do the bathroom and the kitchen reno, and you're back in there.
Yeah.
So again, the first iteration of the mine, they did a very good job. They did a lot of capital investment underground in the ramp and the galleries, and we step into that, and so that, and like you talk about how people, there's a lot of arm waving around resource estimates, but then when the rubber hits the road and said, what's it actually going to take to get this back in? People are they don't really want to pull that lever too fast. We're in the opposite situation. We're kind of saying, should we be doing both of them at the same time as we, in parallel? Because we believe that because of so much infrastructure that we have in place, and because of what we know about the history of the deposit and what we found so far with all the drilling that we've done, we think that it's going to look really well. It's going to appear very well for us. And again, we're excited to be getting going on the PEA as soon as possible.
Well, I'm excited for you because, getting to the heart of the matter is what exploration is all about to me. And it's not just simply putting out a news release about assay results. You have to look at these things very closely. And what you're describing there is something that would be very low capex to build. And these days, most mines are in the $500 million to well into the billions to build mines. If you have a low capex project that has a very healthy IRR, which is you get an indication of that between the gap of the cutoff grade and the average grade, I can understand your enthusiasm for wanting to bring this back into production as quickly as you can.
Yeah, and to your point, low capex, and because of the grades that we're looking at, it's something that we can do with a relatively modest amount of daily, weekly average tonnage. We don't have to do massive tonnage here. We don't have to do some massive open pit thing and be pursuing low grades. It's kind of the opposite from a lot of the things you see in the market right now, where you got to have $2 million ounce resource or $1 million ounce resource before you pull the trigger. I don't think so. Like I said, we're 75 yards down the 100-yard race. I don't think it's going to take that much to make this thing get to a point where you can get some good free cash flow out of it. It doesn't have to be the biggest mine in the world, but I'd sure like to have want to have one of the highest return on investments.
And that all comes down to continuity of that high grade. And
Yep.
if you've got the continuity, everything tends to look after itself after that, Michael.
Yeah. And again, we're in a good jurisdiction, great infrastructure, don't have to build a camp. Got a lot of guys that we have a great population out there that are multi-generation underground guys. So there's a lot of expertise in the area. So it is diametrically opposed to a lot of what you see out there in the market. And again, our stock price tells me that we've done a terrible job telling the story. So,
well, I'm gonna help you out with that. The parallels between Red Lake and where you are is striking. You have
yeah,
the right age of rock. You have the orogenic gold systems. You have the high grade continuity, and the depth is wide open. And another similarity is the guy that made Goldcorp into such a big success owns 35% of your stock.
yeah, it's great when something lines up like that.
Well, we'll have to do more of these in the future, Michael.
Yeah. One of my mentors early in my career said, business is simple. You just got to be in the right place, the right time with the right people. And it's very simplistic, but clearly I think this is the right project. I really do think it's the right jurisdiction in terms of competitiveness. We have the lowest cost electricity in North America, and the reality is that it's already serviced to the site. So we have, or is it the right place? Yeah, it's the right place. And the geology supports that. It's the right time. I don't think there's been a better time because of the dichotomy between where the price of gold is and where it's going, and the trajectory of the gold price, and where we're at for cost to get it out of the ground. And do we have the right people? And it's like, yeah, I believe that within our shareholder base, we have a good depth of resources that I'm fortunately able to pick up the phone and call and get a lot of very good insight from.
Well, in addition to what your mentor said to you, 30 years in the mining business has taught me that, sometimes it takes a long time to be an overnight success story.
Yeah.
But to be that overnight success story is sort of when opportunity and timing come together. And I think you've got that at Canadian Gold Corp, and more people need to hear about it. And I'm glad you came on the show to help my audience hear about it, Michael.
Oh, I appreciate you giving me the time. It's a great story, and I love telling the story. And again, it's easy to get excited it's easy to get excited about the horse you're on when it's a great horse. you know.
Well,
So
let's hope
this
you're
is
on a secretariat there of the gold mining business here. You got a
yeah,
fellow jockey there in Rob McEwen that knows something about that kind of a horse.
yeah, absolutely. All right. Anything else, Allan,
No,
or
I'm just going to close it off. I'll be just a minute here. So
okay.
there you go, folks. Canadian Gold Corp, CGC is their stock symbol on the Venture Exchange. You're trading on the Venture, right, Michael?
Yes, that's correct.
Yeah. And yeah, great story. High grade gold right beside a mining town. It's got lots of infrastructure. I love high grade gold projects that have continuity. Having interviewed Rob McEwen so many times and having conversations with him offline, I know he loves high grade gold as well. So I think it's no wonder that he's a 35% shareholder in the company. And I highly recommend you do your homework on Canadian Gold Corp. And I think when you do that, you'll find a very compelling story. On that note, have a great day, and we will talk to you soon.